which talks about lease, which was actually, known as 16 now. This is talking give rises to, like other party to use an asset, which is called lessee, where the owner of the asset is called lessor. In IAS 16 says that how do you account for lease in the book of lessee and how the lessor account recognize is the asset in the book of lessor. That in a summary, that's what actually brought out about this in IAS 16. So in IFRS 17, try to scrap whether it is finance lease or whether it is operation lease. So IFRS 16 now says that there's in the book of lessee, there is something we call a right to use, rights of use or right to use of asset. So that's what IFRS 16 now brought for us, that nothing like whether it's finance lease or whether it is operating lease. So the lessee should record the asset as right of use and asset. So that's basically, so that I can't waste time, what I can say about this.
Okay. Do you have anyone who wants to add to lease? Anyone who wants to talk about lease? Anyone? Lease?
Okay. Good evening, sir. Can
Yeah, good
everyone hear
evening,
me?
ma'am. Yeah, we can hear you now.
Hello?
We can hear you now. Go ahead,
Okay,
please.
so all right. So lease is like a contract that allows um an owner of an asset to give that right, the right to use that particular asset to another party. So basically, it's just a contract that gives another party the right to use an asset that they don't own. Yeah, thank you.
Okay. Yes, any other person? Lease.
Okay,
Okay.
good
Yeah.
evening,
Yes,
everyone.
good evening, sir.
Good evening, sir. So, lease from my hand, lease is an agreement between two party, which are the lessee and the lessor, whereby the lessor gives you right to use an asset to a lessee for a specific period of time in return for, to receive um a payment, either instrumental or whatever. Thank you.
Okay, there's no whatever there. It has to be in installments. Some there you pay in
Oh,
bits,
sorry.
right? So we call it rent, right? Or whatever name you want to call it. Now, when we say lease, lease is of course an agreement between a landlord or the owner of an asset and a tenant, someone who wants to use the asset. Do you understand? Now, this agreement is when the owner of that asset tells the user, the lessee, the owner is the lessor. When he gives the lessee the right to use his own asset for an agreed period of time in exchange for a specific payment, which is called rent. Do we understand? Ah, are we there, please?
Yes, we are
Yes,
with
Yes, sir.
yes,
you.
yes,
Yeah.
we are here.
So that is it. When we give a lessor the right to use an asset for a particular period of time, all right, in exchange for rent. So use my asset and pay me rent. That is lease. And of course, for the purpose of this class, we classify lease for accounting purpose and for tax purpose. All right. Now, for accounting purpose, what is lease? For tax purpose, what is lease. Now, for accounting purpose, in the other side, we have the finance lease and the operating lease, right? That's for accounting purpose. But for tax purpose, we have it to be tax lease, which is a true lease, and a non-tax lease, which is not really a lease, but a loan arrangement. Are we together, please? Are we there?
Please,
Yes,
could
yes,
you
we
say
are.
that again?
So we have for accounting purpose is where you have the two types of lease that you have always known, which is operating lease and finance lease. They have their distinctive definitions and what differentiates them from others, right? So that's one is that. That is for accounting purpose. You need that one for your account. All right. Now,
Yes.
for tax purpose, you also have lease to be tax lease, which is the original lease. All right. And the
Yes.
second one is a non-tax lease, which is a loan arrangement. All right. Now,
Yes, sir.
whether it is tax lease or a non-tax lease, we still have it in our different types of lease. All right. Now, for the different types of lease, what do we have them to be? We have the capital lease, right?
Mm-hmm.
Now, a capital lease is the lease we have. See, basically, let me tell you, this topic is just to remind you of the same thing you did, right? Do you understand? It's just to remind you of some
Okay.
of the things, some of the things we have in our other places you've learned about lease before, right? In your account. Are we together?
Yes, sir.
Aha. Now, for a finance lease, a finance lease is the transfer of that risk and reward of ownership to the lessee, right? So your finance lease is your capital lease. Someone should run us through finance lease. I don't want to spend too much time on this topic. I'm starting it and I'm completing it today and even taking another topic today. I'm not taking one topic today. All right. So let's go. Finance lease, anyone? What do you understand by finance lease?
A finance lease is a type of lease where the uh, the assets transfer will not be transferred at the end of the lease assets at the end of
The
the
what
lease
will not be
period.
transferred? What will not be transferred?
I mean the
Uh,
ownership.
uh, uh,
I mean ownership. That's what I mean.
mm, will not be transferred to
The
who?
ownership to the lessor,
Okay. Now, who
to
is
the
the
lessor.
lessee?
The lessee is the one that we gave the right to use the asset. The
Okay.
lessor is the owner of the asset.
Okay. So the lessee is the one that is given the right. Abi?
No, the lessee is the one that we gave the right to use that asset. For example, I own an asset now. I
Mm,
gave it to you for a party. Okay, be paying me 600,000 every month for 5 years. I
okay.
am the lessor. You
Mm-hmm.
are the lessee.
And that's what I'm saying, sir. You are mixing it. Lessee
Eh,
is the tenant, is the user. Abi?
user, yes, yes.
Now, that's what I said. Now, lessee is the
Oh,
person that
okay.
has been given the right to use an
Right,
asset. Abi?
exactly,
Eh.
exactly, sir. Exactly,
Why
sir.
the lessor is the landlord, the owner of the asset.
Exactly,
Abi?
sir. Exactly,
Okay,
sir.
now tell us what a
Yes, sir.
finance lease is.
So that the finance lease now, at the end of the lease, the ownership of that asset, the ownership of that asset, please correct me if I'm mistakenly, will not be transferred to the lessor.
Okay.
That means at the end of the lease period, So the asset will now be for the lessee.
So you are mixing it again.
Now,
You are saying that the ownership of the asset will not be transferred to the lessor, whereas the lessor is the owner. Please,
but because of it is a finance lease,
I'm coming. Do we have anyone else on this call? Or is it just the two of
Yes,
us?
sir.
Hello?
I'm expecting
Hello?
Yes,
someone
sir.
else again.
Yes,
So
sir.
this
A finance
yes,
lease.
Yes, yes.
Yes,
Hello?
oh, yes.
Hello? A finance
I don't know if you
lease.
understand the argument we are having.
Yes, we understand.
Yes, sir.
Okay. Someone else wants to go. Go for it, please.
Lease is
A,
the
fin- a
finance lease.
finance lease
Sorry,
is a
the
lease
lessor
in which risk and
is
reward
the
of
owner.
ownership is transferred to the lessee.
The risk and ownership
Hello.
is transferred to the lessee.
Yeah.
Okay. Uh-huh. What differentiates finances from operating lease? Because in any of the lease,
Yes.
at least the user uses it, right? The user has the
Yes.
possession,
Yes.
right?
Yes.
Yes.
Mm-hmm.
Okay.
So what
Yes.
Hello, sir.
differentiates finance lease from capital lease? Yes, go ahead, sir. Finance lease from
Okay.
operating lease.
So when it comes to finance lease, the lessee enjoys the benefits that comes to the asset and also every risk that comes to the asset during the time of using the asset. The lessee bears the responsibility. But operating lease, the risk involved is borne by the lessor. The reward that comes with the use of the asset too is also for the lessor. So that's
Okay.
for that.
Thank you, sir. Do we have anyone else?
Yes, yes, sir. Can everyone hear me?
Yes, we can hear you. Go ahead.
For the so at the end of the period of that contract, the ownership is being transferred to let's see. Why for the operating lease, that's not actually happening. The ownership
Okay, so let's consolidate everything. For operating lease, right? The ownership and reward, the risk and reward of ownership. Okay, we are in finance lease now. For finance lease, the reward and risk pertaining to that particular asset will be transferred to the lessee as at the time of use, right? At the end of the lease period, the lessor can give the lessee the option to buy the asset. In Islam, for those of you who studied banking and finance, they call it ijara under Islamic banking, right? They call it ijara. Now, the lessor can give the option of purchase after the lease period. Do you understand? Now, one thing about finance lease is that the lessor is the owner, of course. He has given it to the lessee to use for a period of time. Now, at the end of that period, right? At the end of that period, the lessor can give the lessee the option of if you want to buy the asset, you buy it. Why? Because under finance lease, the lease arrangement covers major parts of the lifespan of the asset. Now, let's take for instance, I have motor vehicle, right? Now, for motor vehicle, the asset is, let's say, what's the lifespan of motor vehicle according to tax? What's the lifespan?
4 years.
And even depreciation. 4 years,
Five,
right?
4 years.
4 years. Thank you. Now, if it is 4 years, if you are leasing the asset, you can lease the asset
four
for
years.
even
4 years.
4 years, but it must not be more than the lifespan of the asset. You can lease an asset for 5 years. The lease arrangement cannot be for 5 years when the lifespan of the asset is 4 years. No, it is not possible. Am I right?
Yes.
uh Now, which means the asset can be purchased. Now, let's take for instance, I gave you my asset for 4 years. At the end of the 40th year, I can give you the option to buy the asset. Don't you think so? I can decide that okay, the asset is available in case you want to buy it, you can buy it. That is an option of buying the asset, the lessor can give the lessee that option because the lease arrangement already covers major parts of the asset.
That's it. Okay.
Please, does it make a sense now?
Yes.
And that's what we have there. All right. I hope we are together.
Yes, sir.
Yes, we are together.
Now,
Yes, sir.
the risk and
Yes, we are.
ownership is lies in the hands of the lessee. Now, which means the lessee can recognize the assets, can recognize the leased item as his own asset in his financial statement. Am I right? Please,
Yes.
does that make a sense?
Yes.
Yes, sir.
Because major life,
Come again. Hello, sir.
I'm saying that the lessee can recognize the asset, the leased item, as his own asset, right? Do you get it now?
Yes, sir.
Yeah. So
That
that
is all.
is it. Now,
Okay, sir,
that's
like
why,
that's under a finance lease, right?
yes, that's finance lease. So finance lease is a capital lease, a capital asset. When we say a capital lease, a capital asset. So you can use the asset for more than 1 year. Do we understand, please?
Yes, sir.
That is a finance lease. Now, how do you know if it is a finance lease? At the end of the asset, ownership, I mean, at the end of the lease period, ownership can be transferred to the lessee. It is not a must, though. I don't know if I'm making a sense here.
Yes,
It
sir.
is not
Yes,
a
yes.
must that ownership is transferred. Ownership can be transferred. But under I mean operating lease, ownership will never be transferred. Are we together, please?
Yes.
Aha. Ownership will never be transferred because it is an operating lease. Proceed. Are we proceed? Okay. Yes, I'll take it as yes. Then also another indicator is that if you want to know if it is a finance lease, lessee has a bargain option, bargain purchase option. What is the bargain purchase? So this one is saying it's an option, which means you have an option to discuss the
Okay.
purchase, negotiate the purchase of the asset at the end of the lease period. Then the lease term covers major parts of the asset, which is more than 80% of the lifespan of the asset, right? Present value of lease payments is equal to the fair value of the asset, and also asset is specialized for the lease. Do we have anyone with any question before I proceed?
Yes, sir.
Go ahead, sir.
Yes, I have something
Okay.
to ask.
I, hello, sir.
We can hear you, sir. Go ahead.
Okay. Uh, Under this finance lease, that that
Mhm.
that the lessee have control of the property. I want to ask, the who will claim capital allowance under the finance lease? Is it right for the finance the this thing, under the lessee to claim capital allowance under finance lease?
Yes, sir. That's why
Oh,
I said it earlier that that is his asset.
okay.
So I have a question.
Go ahead, please.
Lease and rent, are they the same?
Sorry,
Lease and rent, are they associated?
I can barely hear you.
I said lease and rentage, are they the same?
Lease and rentage.
Yes, sir.
So it can be the same, it can be different. For instance, your apartment where you stay is under rentage, not lease. Do you understand?
Yes.
Aha. So lease is professional. We use lease for corporate entities, and sometimes even corporate entities record it as rent. So it depends on the agreement. For instance, if I'm renting an apartment now, if the landlord, if my own landlord personally tells me to pay 2 years rent, I'll swear for him.
Yeah.
Do you understand?
Yes, sir.
uh But under lease, if it is a finance lease is more than a year. That person can mute,
Okay.
please. That person that is having a conversation underground, please, you can mute.
Yes.
I'm listening, sir.
I'm just telling that person to mute.
Okay, sir.
All right.
Please, can I add something to this finance
Go ahead,
list?
please.
I think the fundamental issue there is that under the finance list, it's a special type
Your
of.
voice is breaking. Oh.
My voice is break. Okay, I can let me listen. Under finance list, it is a situation whereby the user cannot finance the cost or cannot purchase the assets. It's special. And at the end of the period of finance lease, what remains, the lifespan of the asset purchased or in use, is always scrapped. So it is not, my own understanding is that the lessor has nothing to do with the scrap any longer. And that is the key issue, that it is once the lessee, the risk and the usage is transferred to him, to the lessee uses it, and at the end of the period, what remains in the life of this scrapped. And the lessor has nothing to do with any longer. So I think this is the main difference between the finance lease and the general lease. Because in general lease, many users can use it, can lease it to this person, this organization, lease it to another one. But in the finance lease, it's not like that. Because the user, the lessee, cannot finance the asset, purchase of the asset. So the financer has to come and finance it. And the renter, what is returning to the lessor, is enough to purchase the asset, but because the lessee cannot purchase, that's why finance came in and leased it, purchase it and lease it to the user, the lessee. I think my understanding of it. Thank you.
Okay. I didn't get what you said. I didn't get everything you said, but I was able to pin out some items there, which are the differences. Do we have anyone who wants to say anything to that before we proceed? Okay,
Okay,
if you are
sorry.
saying
Hello,
yes, go
sir.
ahead.
Sorry,
Yes,
just cut
please.
you short. I wanted to ask, looking at the economy of Lagos State now, so when some
Mm.
real estate agents build their house, they list some part of the apartment and they place some on rent. So the least part of it, can we classify that as a finance lease?
So that's it. It depends on the arrangement. It could be a finance lease. Now, if it is an apartment, eh,
Yes, sir.
does it cover up to 5 years?
Yeah, sometimes cover up to 5 years, 10 years, like that.
Now, if it is up to now, ordinarily an apartment, a building is 10 years, right?
Yes.
So if it covers up to 8 years of the asset of the building, then you can treat it as finance. So it's always an arrangement. It's always in the contract. A lease does not come by accident. There is always a contract to guide it, and it will be boldly written on the contract if it is a finance lease or an operating lease. Take for instance, if I rent an apartment, right? Now,
Yes,
that's
sir.
why I said a rent is different from a lease. If I rent an apartment, I'll be the one to pay for my electricity bill, right?
Yes. Yes, sir.
Waste disposal, security, I'll be the one to pay. And even though I'm paying for 1 year rent, now ordinarily, if it was a lease, 1 year rent or 1 year lease is an operating lease, right? And under
Yeah.
operating lease, it is the landlord that will take care of every expenses of the leased item. It is the landlord, not the tenant, right?
Yes, sir.
under operating lease. But in my own case, my landlord will not pay my electricity bill for me. Now, as I said, rent is different from lease.
Mm-hmm.
Do you understand?
Yes, sir.
And your landlord will not draft a contract for you and will call it lease agreement. It will be rental agreement,
Exactly.
tenancy agreement.
Exactly.
Aha. So rent is different from even though what you pay for both of them is rent. What you pay for both of them is rent. It's just like saying that what you pay to an ordinary shareholder is dividend. To a preference shareholder is also dividend. Do you now say two of them are the same? No.
No, no,
Sometimes they
no.
can
They are
call preference shareholders that they collect rent because it's fixed. Their dividend is fixed, their rent is fixed. You can call it interest. I mean, I said rent. You can call it interest. And the venture holders are also getting interest. Would you say they are the same? No.
no.
So that's it.
Thank you.
We can
Okay,
proceed now, right?
sir. Just 1 minute, sir. Okay, let me use this for example. Here in our place like that. The
I can't hear
house.
you.
Okay, can you hear me, sir? Can you hear me clearly, sir?
Better, sir. Yes, better.
Okay, I just want to use it for example so that we understand. In Banana Island, we have an apartment there. It is a building, very big. So the tenants pay like 30 million per annum. And that 30 million per annum, since they do not have anything to do concerning the heating, renting, electricity, everything, it will be taken care by the landlord. How do you classify that?
Honestly, I
Nothing.
didn't. I'm not hearing you well. Can wait, hold on. Do we have anyone who heard him very well? Should please say it again.
Okay,
You
can
can
you hear
say
me
it
now,
again,
sir?
sir. Yes, I can hear you. Go ahead, sir.
I said, let me use Banana Island here, for example.
Okay.
We
Okay.
have a building there. The building is already built for rentage. So the tenant pays 30 million per annum every year, pays 30 million. But
Okay.
nothing the tenant will do, either to pay for electricity, generator, when anything, everything is there. Just pay your hand rent. That's it. So how do you
Mm,
classify that?
so it depends on the agreement as well. If you look at it, most likely it is tenancy agreement. And I'll give you an example. Even in Abuja here, there are so many apartments that once you are going in there, you collect an approximate, sometimes they collect electricity bill from you, right? And there are some of them that they calculate, they put an amount to it that, okay, if in a month your electricity bill is this amount, we sum it by 12 months, your generator expenses with this amount. I can sum up everything and give you the bill to be 30 million naira. It is not the landlord that is paying from his own pocket. It is still your money I am using. I only calculate. That's why I said the agreement will determine if it is a lease or a rent. So there is no way you get an apartment of 30 million naira without having a contract. So it is the contract that will tell you what it is. Shall we proceed now?
Yes, let's go on, sir. Let's move on. Let's move on, sir. We understand.
Okay.
Good evening, sir. Not
Hello,
your
sir.
Emma.
Good
question
evening,
here,
sir.
sir. Is this
Yes, ma'am.
advanced taxation or FDRO?
This is advanced tax, man.
Hello. Good evening, everyone. Good
Good
evening, sir.
evening.
I suggest we go ahead.
Good evening,
A lot of
sir.
questions with
Don't worry,
lot.
don't worry,
Go
don't worry,
ahead.
don't
Enough
worry.
is
Don't worry, I understand. Don't worry. I'll
Yeah,
handle it.
that's what I want to actually a shame opinion, because if we continue to ask questions like this, at the end of the day, we may end up not achieving the goal. Maybe, sir, I would suggest that we have time for question. Maybe after taking some lecture, then if it's system like Mr. Ibrahim used to do, it is toward the end of the class that he allow question and answers. If
So,
we continue like this, at the end of the day, we may end up not achieving
so thank you.
anything today.
Thank you.
As a please, thank
I
you.
understand your
Yeah.
point as well, right? The issue that I just have is that there are times that uh students will not move too fast when they don't understand the basics. And that's why I allow this as the basics, right? Now, after this, you don't expect me to accommodate all these questions again or something related. Once we start moving, we start moving. But I like everyone to understand the basics from the beginning before we move, right? So that's why. Now, let's come back to our class. The features of a finance lease. How do you know if it is a finance lease? Number one, it is non-cancelable. Now, you cannot be in the middle of a finance lease and say you want to cancel. Don't forget, finance lease cover a longer number of years, right? And you can't cancel. Do we understand? So if
Yes.
you can't cancel,
Sorry,
it
Tom,
means it's
can
a
you mute
finance.
your mic?
Sorry?
I said Mr. Reply to mute his mic. I think he has already muted.
Okay. Now, if that is the case, it doesn't mean that you can't cancel it at all, at all, at all. But there are penalties, and the penalties can be very heavy. That's why we say it is non-cancelable. And once you see that it is a non-cancelable uh, lease, then that's a finance lease. Another feature of it is that lessee bears the maintenance, insurance, and other costs. Everything that has to do with that asset is borne by the tenant, the lessee. And also, lessee may purchase the asset after the lease term, and it is treated. Lessee treats the asset as if he owns the asset, right? That's that. Now, for operating lease, is the opposite, right? So for operating lease now, of course, the lease does not transfer the risk and rewards of ownership to the
To the
lessee,
lazy.
right?
Okay.
The landlord remains the owner. Now, the
Okay.
feature is that asset ownership and risk remains with the landlord, the lessor,
Yes.
right? Now, lease term is shorter than the asset's useful life. And also, lease may be cancelled or renewed. Lessor handles maintenance and insurance, and lessee only pays rental charge. Now, I would have gone into details, but this is taxation, not your SBR. Do you understand? So that's why we're not going into details. Now, what's the tax implication? For a finance lease now, right? The interest portion of rent, that rent you pay, right? The rent that is received, the interest on rent that is received by the landlord is taxable.
Sorry, is it under finance or?
Finance lease,
Okay, okay. Thank you, sir.
right? That
Okay.
is taxable. Also, the interest portion only attracts withholding tax. Anywhere you see interest, of course, there is always a withholding tax on interest of 10%, Abby, which used to be at a flat rate,
Yes.
right?
Yes.
Aha. What I mean by used to be is that I'm talking about up to 2024. In 2025, we have a different way of calculating withholding tax, but that one is not part of your syllabus yet until the next diet, until the November diet. Now, also, interest is exempted from VAT. Interest on rent is exempted from VAT. That's why you will not receive any rent rent invoice from your landlord and then you see VAT there. It's not possible. Then the last one is that CGT is payable only when the asset is finally sold. So if the asset is not sold, you don't pay CGT. That's for the lessor. Now for the lessee now, your company income tax, for your company income tax, the interest you pay, the related costs, the maintenance costs, all the expenses incurred on that asset are allowable expenses. You know what allowable expenses are?
Yes.
Okay, they are all allowable expenses. And insofar the asset is yours, remember, substance overview. We talked about substance overview in our SBR, right? That since the asset is yours, by substance, it belongs to you. But by law, it belongs to the owner. Are we together? And I used lease as an example as well. Now, since the asset belongs to you by substance, then you can claim capital allowance. Since you recognize the item, the leased item as your asset, that means you can claim capital allowance on that asset. Then also, lessee must deduct withholding tax on interest and remit it to NRS. But as at the time of this material, we still use FIRS. So you can use NRS, right? Nigerian Revenue Service. Are we together? Hello, are we together?
Yes, we are.
Yes.
Yes.
So don't forget,
Yeah.
for withholding tax, it is the customer or the tenant that deducts withholding tax, right? You deduct the withholding tax from the money you're supposed to pay your supplier. For those of you who have forgotten withholding tax, I know you don't have withholding tax in this professional level.
Okay, so my mom said this.
Also, VAT, sorry, okay,
Tó bá wù kí gbogbo èèyàn ló máa sọ̀rọ̀.
that person should please mute, please. Hello, who is that person, sir?
Like ìyẹn lè dáhùn pé mò ń
Hello,
gbọ́.
who is, God.
Right no one there kò dẹ̀
Someone
sọ̀rọ̀
should
kan
please help
so.
me with that person speaking.
Ayomide David, please mute your mic.
Sorry.
So please, Mr. Ayomide, please. Now, VAT on purchase is capitalized with the cost of the asset, right? When you pay VAT on the purchase, you capitalize it as part of the cost of the asset. But what if it is not a leased item? How do you do it? What do you do? What do you do to the VAT? That one is another class entirely. Now, CGT is payable only if lessee sells the asset after purchase, right? If you are given the option of purchasing the asset, right? Yes, you pay CGT when you sell it after you have purchased it. That's that. Now we have the operating lease. For operating lease now, don't forget the entire expense, maintenance cost, and the rest of them, incidental cost, is borne by the landlord, lessor. Now the entire rent is taxable, is a taxable income for the lessor. And lessor will claim the capital allowance on the leased item because he owns the asset and by substance he also owns it. Then withholding tax of 10% is deducted on rent by the lessee, by the tenant, right? So that's it. And VAT of 7.5% is charged on the total rent. Then for the lessee now, the lease rentals are allowable deductions. It's just like you're paying rent for your apartment, and lessee cannot claim capital allowance. Withholding tax of 10% must be deducted, right? And VAT charge is not an input VAT. Instead, it is expensed. You know what an input VAT is? Do you know what an input VAT is? Input VAT. What is an
Yes,
input VAT?
Sir.
VAT on purchases.
VAT on purchases is an input VAT.
I think it's the
Huh?
VAT built
Like buying of raw
I
materials.
think hello.
Yeah.
is the
The input fact is the affordable taxes on goods and services that have already been charged is already inclusive. The tax
into
on
the
this
contract.
is being added already. Hello.
I don't understand. I don't understand what you're saying. I'm not talking of VAT inclusive or VAT exclusive. What is input VAT?
That input
Input
VAT is on material, like purchases of materials. VAT on
Okay,
sales
someone
is
is saying VAT
output.
on purchase, another one is VAT on sales. So whether VAT on purchase,
VAT
okay,
on sales is output.
VAT on sales is output, VAT on purchase is input. Thank you, sir. So your input is what you use in production. The VAT you pay on your input items, that is your cost of sales. The VAT you pay on that input items is called input VAT. So that's that. It's just the simple way of recognizing it. Now, for capital allowance, like we've said, if it is a finance lease, right? Lessee will claim the capital allowance, and if it's an operating lease, the lessor will claim the capital allowance, as if the lessor used the asset for his trade. But if it is a finance lease, it's based on total lease payments, whereby since the lessee used the asset, lessee will claim that. Now, the variance in finance lease or variance of finance lease, right? We have a leverage lease, which is a three-party arrangement where we have the financier, the lessor, and the lessee. A leverage lease under Islamic banking, they call it, is that Mudaraba or Murabaha? I think that's Mudaraba. Under finance, what do you call it? Islamic banking.
Mudaraba.
Sorry?
It's Mudaraba.
Mudaraba, yes. I'm right. You studied banking and finance, huh?
Yes, it's Islamic banking and finance.
I'm asking if you studied banking and finance.
I think you ask, man.
Okay, so that's
it's
it.
actually
Yes.
Mudaraba. I'm a Muslim, so that's
okay.
Yes.
Okay, yeah, Mudaraba. Yes, you are right. It's Mudaraba. Yes, leverage, whereby we have a financier, and the financier can be a bank, right? We have the lessor and we have the lessee. Then also we have the sales type lease, whereby the manufacturer or dealer or lessor recognizes profit or loss on inception. Sales type lease, whereby you recognize the lease as if it's a profit or a loss. So you record it in your P&L account right from the inception. Then also we have the sublease. Sublease is whereby, yes, you lease an item to a tenant. The tenant also leases the item to another tenant. It is allowed. Yeah. Even in Islamic banking too is allowed. We have a name for it. You don't need to bring that name, sir. We are not in Islamic banking class. Then also we have sales and leaseback. Now, a sale and leaseback is whereby the landlord, instead of the landlord to lease the item, the landlord decides to sell the item to someone. Now, after selling the item, you now stay in that same apartment as a tenant. So let's take, for instance, I own a 4-bedroom flat, 4 units, right? Now, I decided to sell that 4-bedroom flat, 4 units. Let me say 3-bedroom flat, 4 units. 3-bedroom flat, 4 units. I decided to sell that apartment to someone. I sold it to A and B Nigeria Limited. Now, after selling it to them, I now lease one of the apartments and I became a tenant there. Probably because I was even living there before I leased it out. All right. So that's it. Now, so the seller sells the asset and then lease it back. Now, the reason for this is for liquidity or for tax reason. Right? So how is it for liquidity? If you need money, you sell your house and then rent one of the apartments. So that's for liquidity purpose. And for tax purpose now, let me give you an example, a practical example for tax purpose. Do you know that under the 2025 NTA, a landlord will not get the rent relief allowance? Are you aware? Are you aware, please?
Yes, sir.
But you will pay tax on only capital gains, right?
Which one is tax on capital gains? I don't understand.
I mean that if it's not paying tax on annual rent, so that means with the introduction of the tax act now, you will be paying 15%. Is it 30% of 15% on capital gain tax on the provided it sells the building.
I'm not talking of selling. No, you are mixing them. I'm saying that a landlord will not have rent relief allowance under the new 2025 Nigerian Tax Act for personal
Yes, yes,
income
yes, yes.
tax.
Yes, that is
Are we
true,
all
of course.
aware? The
Yes,
rest of you,
sir.
are you also aware?
Yes, we are
Is it
aware.
because he's the landlord? You say
Yes,
that?
well.
Because
We
it's
are aware, please. We are aware.
okay.
We are aware, let's go ahead.
Now, planning and compliance. Now, there's a difference between tax planning, tax avoidance, and there's a very thin line difference between tax planning and tax avoidance. The two of them are legal actually, but one of them can later become a criminal act. All right. Now, to manage lease related tax exposure, you need to identify and classify all your leases. Is it finance lease? Is it operating lease? You classify them separately. And also, you track and reconcile your book to tax differences, right? Yeah, that's why we have deferred tax. And also, you keep your lease registers, that is the dates, the values, the VAT and withholding tax status as well. Then stay updated with IFRS 16 and the Nigerian tax law changes. Yeah, of course. Since we now have the NTA now, so you should keep yourself abreast of the new tax law. So that's that. Now, the regulatory framework for lease in Nigeria, right? We have the equipment lease. When we say regulatory framework, we're talking about the law that is guiding you in terms of lease, law that regulates or that regulates the act itself, right? That makes it lawful for you to go into a lease arrangement, right? That says that a landlord must collect this amount, landlord must recognize this right, tenants can recognize this one. So the main laws we have is Equipment Lease Act of 2015, we have BOFIA of 2020, we have CBN revised guideline of 2014 as well. Now, that aside, we also have the regulatory framework, all right? And we have CBN, we have NDIC, and we have the Equipment Lease Regulatory Authority. Law is different from body, right? Law is different from body. So let's have that. Now, we have registration. All lease agreements must be registered with the Equipment Lease Regulatory Authority within 14 days of commencement or within 3 months for earlier agreements. Are we together? Within 14 days of commencement or within 3 months for earlier agreement. So that means is either once you agree, 3 months of agreement, you can inform them, or commencement, whichever is earlier. Now let's take for instance, whichever is earlier. Don't forget, you can have a lease arrangement that I'll be leasing, let's say, a real estate that the building is work in progress. You can lease it, you can go into lease agreement now for an estate that is still under construction. Let's say they agree to complete construction by December, and then you tell them, I'll move in January. Commencement of that lease is January, but the agreement is now. Within 3 months of forming the agreement, which means this is January, by April, you must inform the regulatory authority, all right, the regulatory body within 3 months, even though it has not commenced, right? But if the lease agreement is to start from next month, the lease commencement is from next month, February, that means either 3 months or 14 days to commencement, you must inform them, right? So that's what we have. Now, go through the summary. For lease payment forgiveness, you know what debt forgiveness is, right? Right? Huh?
No, sir.
Debt forgiveness.
No, sir, I don't know, sir.
Who else? All of you don't know.
I don't know, sir.
Okay. Now, debt forgiveness is when they forgive you that you are owing me back. Don't worry, I forgive you. Don't pay back. That is debt forgiveness. Now, lease also can be forgiven. Lease payment can be forgiven, whereby you are asked not to pay the remaining rent. Now, the lessee's treatment, the tenant, is to recognize a gain in P&L account equal to that amount of lease payment forgiveness. I mean, lease payment forgiven. Now, what do we mean? Ordinarily, you've recognized that debt as a liability. Abi,
Yes.
but this one will not be a liability since is okay. It depends. It depends, right? If it is what do we call it? A finance or operating lease. Sometimes you recognize it as a liability. If it is a finance lease, you have it as a liability, of course, right? Now, for lease payment forgiveness, if you are forgiven, you recognize it as a gain in your P&L account or
Yes.
as a loss equal to the amount of the lease payment that was forgiven. All right. Then also for the lessor recognize a loss in P&L account because he's expecting the money and automatically it is now a loss, right? So that's it. Now the tax implication is that lessee may have taxable income arising from that forgiven amount. It is a gain now, right?
Yes, again.
So you
So,
can have a taxable income on it, you will pay.
yeah.
And lessor can claim a tax deduction for the loss. Do you understand?
It has
Lessor
tax.
can, yes, tax deduction as a loss. Do you understand?
Yes, sir.
Aha, so that's what we have there. Shall we proceed, please?
Yes. Continue, sir.
Okay. Now, we have IFRS 16 on sales and leaseback transactions. And the objective of IFRS 16 is to clarify how seller lessee, don't forget, he was the owner of the asset, he sold the asset and became a lessee. Abi?
Yes.
Abi?
Yes. Yes.
Aha. So, to clarify how a seller lessee measures and account for lease liability in sale and leaseback transactions. And the key highlight is that we have a lease liability measurement whereby the seller lessee measures the lease liability based only on the lease payment, not on sales proceeds. For your sales proceeds, that one CGT will cover it. Right?
Yes, yes. So
Aha, CGT will cover that. Now, the variable lease payment may affect subsequent measurement of lease liability. All right? So that's it. Now, effective date is that we started using this law in 2024 January. Now, regulatory context, we have FRCN can issue guidelines for consistent IFRS 16, and entities must ensure compliance with IFRS 16 and the Nigerian tax laws. Right? So we have that. Now, practical compliance step. If you want to comply with this, now you are to look at understanding the requirement for measuring the lease liability. Ensure compliance with IFRS and FRC guidelines. Okay. Assessment is different from access. Assess your tax implications of lease forgiveness or modification. Review and update your lease contract to reflect current accounting practices. Now, for lease term and useful life of leasehold improvements, there's something called building improvements, right? Eh?
yes, yes.
What
That's
is
the IS
building?
16, right?
What is building improvements?
building improvement, if
Just
in
to
life that
enhance.
if it's improve if you add values to the construction of the building, regarding to, related to capital, which is if it's capital in nature, if you add values to the building in terms
Okay,
of
so I get what you're
I
construction
trying to
think
cost.
say.
I think giving a facelift to an existing building to add
Mm.
value.
So hard value means if it can increase the capacity,
Exactly. Yes.
right? For instance, now we have that a building, normal building, and then you have demarcation. You now created demarcations into an existing building. So the building that can take 5 classes, that we can demarcate into 5 classes, we made it 6. That's building improvement, right? So that's it. Now, lease term for under this leasehold improvements, for the lease term now, the lease term is the non-cancelable lease period plus any optional renewal period if it is reasonably certain that the lessee will extend. Only if it is certain that the lessee will extend. All right. So that's it. Now, we also have a useful life of improvement. And useful life of improvement is the shorter of the useful life of the improvement or the remaining lease term, whichever is shorter. Okay. Now, we have considerations. So your consideration is to review your contractual terms and renewal option. Consider the economic incentives to extend lease and assess your asset usage pattern. Then also for accounting for sale and leaseback transaction, that one occurs when an asset owner, we've discussed that before. Your condition for recognizing a sale recognition, for your condition for recognizing sales, IFRS 15, under sale and leaseback transaction is that the buyer will become the lessor. The buyer lessor obtains the control of the asset. That's the condition 1. And also, if it qualifies as a sale, the seller lessee recognizes a right of use asset for the retained right. That is the part that has been leased back. The lessee recognizes it as a right of use asset and also recognizes a lease liability for the payments to be made. Are we together?
Yes, sir.
Okay, so that's it. Now, the measurements. You measure your lease liability by the present value of lease payment over the lease term. You have your discounting rate, which is your rate implicit in the lease, or it can be an incremental borrowing rate, right? And the last one is the variable lease payment that is not backed on an index rate or excluded and recognized in your P&L account. That calculation will be done in your SBR. All right, so that's it. Now, subsequent to remeasurement will trigger a change in lease term, a change in purchase option assessment, and a change in expected residual value guarantee payment, as well as a change in lease payments that is due to an index or revision of the rate. Now, we have some questions that guide your proper accounting treatment. Some questions you ask, right? Now, the first one is you need to ask yourself the proportion of right of use assets that is retained under sales and leaseback. Then also, you need to determine the initial and subsequent measurement of the lease liability, the treatment of the variable payment, and the presentation in your financial statement, as well as the disclosure. All right. Now, for the presentation and disclosure, you tell us the lease liability, right? And of course, your lease liability are presented as liabilities in your SOFP, Statement of Financial Position, right? And if there's any other disclosure, you put them in your gain or loss from the lease and from the sale and lease back transaction. We have the details of lease conditions and forgiveness as well, if any. Then also we have transition and effective date. Now, transition January 2024, right? All these things we are doing, they are in effect on January 2024, right? Everything in lease in your taxation, right? Hello.
Yes.
Now, the effective date of all this thing is January 2024, right?
Okay.
And of course, you can adopt it earlier because it has been implemented since, it has been completed since 2022. Now, entities are to apply amendments retrospectively as permitted by IFRS 16. I believe you know what retrospective treatment means. Yeah? You know what it means, Nabi?
Okay.
What is okay? Do you know what it means or not?
Sir, do you mean accounting?
Retrospective treatment.
Because yes, you know now. Retrospective application, right?
Yes.
Retrospective adjustment.
What is retrospective application?
Retrospective application is the process of adjustment. Process of applying it as if it has already been applied. You are doing it as if it has already been applied. Process of
yes,
comparing.
I understand this, sir. So retrospective treatment is to treat a particular standard, the previous year's transactions, as if that transaction was like that from the beginning, right? So you treat them as if that was how it was meant to be done or that was how it was done in those previous years. That is retrospective treatment. Then also you present a third financial position if required by IAS 1. And what is that third financial position? Your misstatement. Your restatement, not restatement. So we have all of that. Now, the key justification for your amendment is to ensure that the seller lessee recognizes only the gain, right, relating to the rights transferred, and not the one that is retained, that is the retained right of use. No, not that. Then also, the approach reflects the economic reality of the seller lessee, right? That's it. Now, do we have any question on this? Do we have any question on this? Any question?
No, I don't.
Okay. Now we go to our chapter 14. And chapter 14 talks about digital economy. Let me search for chapter 14, digital economy. Yes, sir.
Yes, you are mentioning multiple things the other time that the new tax reform for 2026 that all the reforms we shouldn't be expecting. They won't treat it. They won't bring it in this diet.
They won't bring what?
Diet.
NTA 2025.
I mean, yes.
Yes, it will not come this diet. I can guarantee that.
Okay.
But my guarantee is not a full guarantee. I can give you 90% guarantee. Let me give you 80.
That's what
I think I saw ICANN said
ICANN told us, ICANN gave us the directive that we should continue using the material. That 2025 MTA will not have any impact on our, what's it called, on May diet.
Okay.
Do
Sorry,
you
sir.
have another?
I don't understand what you are saying, sir. Sorry.
That's May 2025. There is nothing like the new tax law, 2025 new tax law. It will not have any effect on your May diet exam.
Okay. Okay. Okay.
I
Thank you,
can't
sir.
Charlie, my
Please give me 1 second, please.
We can just read it for just learning sake.
Continue, sir.
Since our lecturer said he's not coming out, we should be rest assured.
Okay, so now let's go to what do we call it?
Digital economy.
Digital economy. Now, taxation of digital economy will be that one is very short, and we should be able to finish it before we end this class. This class was meant to end at how many hours? 1 hour 30 minutes, right? And we started at 9. Okay, don't worry, we'll be rounding off now. Now, digital economy. I will introduce digital economy to us, right?
Okay.
We'll read the remaining part of it. No, I think it's something we can complete this night. So don't worry. You don't need to read it. Now, digital economy. What do you understand by digital economy? Anyone? Digital economy. Yes. What is that digital economy? Anybody?
Let me try.
Go ahead, sir.
Digital economy is about transformation of digitalizing assets of companies or individuals in order to bring them into taxment.
Okay, I want a more simplified one. Can anyone get it?
Okay.
A simplified one on
Okay,
digital
sir.
economy. When we say digital economy,
Okay, sir. So it means an economy that is based on digital computing technologies. So you can also call it like an internet economy.
okay. Any other person?
Okay, let me add more to it. Add more to it. Digital economy, let me look at high as an example. You know nowadays now, everybody companies are using AI to get information, you know. So that's like example of that.
So your
Can I
digital
say something?
economy, yes, please go ahead.
So I can say is the transformation of technology more into the economy.
All of you are using English, which I've been trying to avoid. Please, that person should mute. That person, there's one person. Who is that person again? And the person has muted. So you guys are speaking big English, and it's scaring me. Which one is transformation? Leave English. Now, digital economy is that aspect of economy that is digital, online, simple, where we make use of ICT, right? An example of them, what do you call this? Social media influencer.
AI.
Simple. AI is not digital economy. AI is not digital economy. AI is not in any economy. I'm not talking of ICT here. Digital economy. An economy that is not physical, where buying and selling is not taking place physically. Instead, online. We have e-commerce. We have people who are making money with Facebook, who are making money on YouTube.
Fintech.
Sorry?
Fintech.
Which one is Flutech?
Fintech.
Yes. So the likes of Sabinus, what do we call them? Ella. That's what I'm expecting from you. All this English of transformation, communication. So now when transactions are taking place online, when we make use of ICT for our transactions, we have Konga, we have Jumia, right? That is a digital economy. And this economy is an informal sector. It's usually an informal sector. In Nigeria, it has always been an informal sector, but now we are bringing it, we are formalizing them. The 2025 NTA recognizes digital economy, recognizes the many informal sectors. And digital economy we give birth to for lawyers now, right? Digital economy, lawyers benefit from digital economy because digital economy gives birth to intellectual property. We are not going into that. That is law. All right. Now, digital economy involves when you conduct a business through the internet. Let me give you a very close example. There are some people that when you are going through your WhatsApp status, when you see their name, you don't even fast forward it, you move it completely. Am I right? Do you have such contacts on your own WhatsApp? On your own WhatsApp?
Yes, we
Those
do.
people that they have so many things posted on their status. They are the ones selling bag, they are the ones selling shoes, they are the ones selling everything. That is an example of a digital economy.
That is true.
That is their market. Your WhatsApp status is their market. Their WhatsApp status is their market. So where two of you meet is that WhatsApp status. You see a shoe, a pair of shoe, or a shirt, or a trouser, or something you like, and you decide to DM, I like this. How much is this? And from there you buy. I have some people that in the morning I don't like looking at their status, or in the third week of a month I don't like looking at their status because that time I don't have money. People who are into baking and confectionaries, people who are selling cakes and small chops, if you look at their status in the morning, you are in soup, you will go hungry throughout the whole day. You'll be craving for what you cannot buy. That is a digital economy. That is a market. When you see something like that and you like it, you just how much? And you conduct your business transaction on that WhatsApp. That is the digital economy. So leave all the English of transformation. Me, I don't speak big English, right? Now, the issue we have with digital economy that we have brought it to taxation is that how do we tax them? The former president, Muhammadu Buhari, was the first president to have that courage to tax the digital economy. And what did he do? The first thing he did was he suspended Twitter. Do you remember when Twitter was suspended in 2023? What 2023 or 2022? That about suspended Twitter.
2023.
2023, yes. Do you remember? So that is it. Now, Twitter now, how do we tax Twitter? How do we tax Facebook, WhatsApp? Do you understand? How do we tax this economy? These people are making millions. What am I saying? Billions of dollars. YouTube. How do we tax them? If they are making this profit in Nigeria, we should be able to tax them in Nigeria. So taxing digital transactions has been a significant challenge, not just in Nigeria, but in the worldwide. Do you understand? And why is that? It's simply because they have a minimal presence in Nigeria. If I ask you now, where is Facebook head office in Nigeria? Where is YouTube head office? They don't have. But yet, they make billions of dollars year in, year out in Nigeria. So how do we tax them? Do you understand? Now, the question will now be, where is the proper jurisdiction? Which jurisdiction should tax an income from these transactions? YouTube is not in Nigeria. Facebook is not in Nigeria. Mr. Mark is not in Nigeria. Tesla, what's his name? You know, of X. He's not in Nigeria. How do we tax him? Where should we tax him? Because taxation is not about how much. It's also about where. That's why you will see Oyo State. That's why we saw, because it's no more in existence. That's why we saw Oyo State and Osun State fighting on Lautech. Which state is to tax Lautech? Do you understand now? So what is the jurisdiction? Now, the traditional rule requires a physical presence or permanent establishment before you can tax any entity. You need to be physically present. When you say permanent establishment, we're talking of a corporate office, a building where you operate, and a permanent establishment is not a warehouse or it's not a place you go to seek for information, to obtain information. That is not a permanent establishment. Do you understand? So permanent establishment, do they have physical presence? If they don't have, that means we can't tax them. And these digital transactions do not have a permanent establishment in Nigeria. Do you understand? Now, we now had so many conferences. The OECD conference and the European Union, they in their own conference, they made a recommendation that digital service, that digital transactions should be subjected to digital service taxes and virtual permanent establishment. Since we cannot have a permanent establishment, which is physical establishment, physical office, we should subject them to virtual permanent establishment. Insofar people can access your business from Nigeria, access ACC. Insofar people can access your business from Nigeria, that means you have a virtual permanent establishment in Nigeria. So we should be able to tax you. Do you understand? Do you know what YouTube loses? If do you know what they will lose if Nigeria suspends them today? Nigeria is a very large market. It's a very wide market. Do you understand? So that is it. Now, the OECD, from their own convention, they recommended that we should have a digital service tax. While the European Union is saying that we should have a virtual permanent establishment, we should subject them to tax based on virtual permanent establishment. But Nigeria, have we really made a significant progress? No, we've not. Do you understand? Now, I think the 2025 NTA covers a whole lot. Yes, that's a significant progress. So Nigeria has now made a significant progress in this area. Do you understand? So I'll now change this one from north to now. Don't forget, the new NTA takes effect from this year, January, right? And also, Nigerian Revenue Service. Revenue Service, NRS, has made efforts to digitalize tax collection process. Am I right? That one is normal now. We've done that one now, Abby. Our tax collection process now has been digitalized. We now have a tax promat. Am I right?
Yeah. Yes.
sir.
So effective monitoring and collection of taxes from digital transactions, though, still remains inadequate. But let's see how it goes from here. So I'll not change this. Now, the challenge we have, it's not a challenge to me. That's why I've always said it that FIRS needs me. Now NRS needs me. They need me. And all these problems, we can sort it out for them if they don't know. It's not a bragging right to. It's experience. Now, the challenges we have in taxing digital economy is how to track the transaction. You cannot give what you don't have. Am I right? Am I right? You can't track a transaction you don't know how they came about. So that is number one. Before you can, so as I'm taking the challenges, I'm taking the way out. So if you want to tax a digital transaction, you need to understand how the transaction works. We talk about what do you call this coin, Bitcoin and the rest of them. You can't tax Bitcoin when you don't know how it operates. Do you understand? You can't tax Facebook, a commercialized Facebook account when you don't know how much the person has earned. Now, let me give you an instance. Lagos State, late last year, they slammed Pella now. How much? Who got that information? Who heard the news? The Lagos State slammed Pella. A tax. How much?
Yes, 30 million.
Eh? Was it
The
30 or
man is
35
rich.
million? Eh?
It was 30 million.
30 million naira.
Hello, did you say Tesla or what?
Pella. You don't know Pella?
All
You know
right.
Pella, ba?
I can get it.
No.
Yes.
So Lagos State,
It's looking as if it's Tesla.
Lagos State cashed in 30 million naira as personal income tax. Why? How? They were able to track his payment.
Please mute yourself or make my ear no block.
Who is
Mute
that person?
yourself.
Who is that person? How come I can't see that? Who is that person, please?
Olariwaju.
Olariwaju, please mute. Please. Please mute. Don't let us start looking for our names, so and looking for how to block ourselves. Please. Thank you. Okay, thank you. So, okay, I'm just reading all the chats here. We should help you. Okay, the video is on record. We are recording. So sometimes you can type something to the message and I will not see it because I'm not even using the screen. You can see that now I'm on the screen. I'm looking at everything, right? But sometimes I am not here. So if you send a message, I will not see it. All right, please, you can just speak, unmute yourself and talk to us. Thank you, everyone. Okay, back to the class. So the first thing is that you need to be able to track the transaction and shift from physical to invisible business framework before you can understand how to tax them. If you can't track them, you can't tax them. Then second one is revenue leakage, where we have inadequate capture of direct and indirect taxes on e-commerce transactions. The revenue leakage. So if you don't know the amount they earn, you can't tax them. And also, the corporate taxation rule is a very big challenge, of course, which says that you must have a physical presence, right? And since they don't have a physical presence, we cannot charge them. But what's the solution now? We should charge them on virtual permanent establishment, VPE. Then for non-resident companies, to determine their tax, okay, for non-resident companies, now to determine their tax by providing digital services, when they provide digital services to Nigeria, it's controversial, right? Which is also on the, for companies now, on the Physical and Permanent Establishment Act. Permanent Establishment Rule that says that you can't tax them if they are not physically present. All right, so that's it. And the effort FIRS has made, or NRS, I'll change this to NRS. The effort they have made is that, yes, for our transactions, right? For our tax payments, we've done that. We now have Tax Pro Max, right? Yeah, we now have Tax Pro Max for our transactions. And also, we have NTA. The new NTA is taking care of the digital service providers, right? And handling them substantially. All right. But of course, we are getting better. We are getting there. Now, for external experience, right? Like I said, the OECD recommended a nexus and profit allocation rule. EU, European Union proposed a digital service and VPE, right? UK suggested a reform to align tax rules with where digital value is created. Nigeria can design their own, which it has been included in the NTA. For those of you who don't know what the NTA talks about, we can't take NTA in this class because it is not relating to May diet and we don't want to go outside box. We still have a lot to do. All right. Now, India introduced an equalization levy and proposed taxing business with a significant economic presence. A significant economic presence is that if something happens to your business under 5 minutes, something is wrong with you. That means you have a significant economic presence, right? Just like India. I mean, just like Facebook. If something happens to Facebook now, everyone will run to Twitter. What is happening? Oh, what is happening? That means they have a significant economic presence in Nigeria. All right, so that is it. And to tackle these challenges, we've discussed uh, all of them, right? That is, we review our fixed base, whereby we can include our virtual permanent establishment to it, right? We have an innovative tax legislation, which our 2025 NTA has covered. We have automation of tax administration, which is also in our Tax Pro Max. We have data handling. Yes, NRS has to do better on data gathering, storage, and protection. All right. Then, of course, we should have a collaborative effort, partnership, strategic partnership. So, for instance, now, who are those people earning from Facebook in Nigeria? We go to Facebook. Facebook give us their names, or we say that Facebook, if they are earning this amount, charge them this tax, deduct this amount as tax, and remit it to NRS directly. We can make it like a withholding tax, whereby they remit it directly to NRS. All right, so that's it. So we have a strategic partnership with them. Then also we have ratification of multilateral convention. So we adopt those decisions or ratifications from those conventions, adopt them. All right, and also we have capacity development, that is to train the tax officials on how to handle digital transactions. Right. So the Finance Act 2019 introduced significant economic presence in Nigeria, right? And that was what Barry used to arrest Twitter then. Twitter, Facebook, and WhatsApp, they are still fighting. They still have that case in court till today. So that is that. Do we have any question? Any question? Any question? No question. In our next class, we continue from chapter 15. Good night, everyone. As if you are still there.
Good night, sir.
Good night, sir.
Good night, sir. Thanks so much.
Yeah,
Good night,
yeah, good
sir.
night,
Thank you.
everyone.